Everyone doing?
Big chillin'. It took me a little bit extra time today because I was well, first I was making food, so I was already downstairs.
You're good.
I didn't want to leave in between, like I
Yeah,
always
it's
do.
it's honestly probably better you do that, Start a
Yeah,
little bit later. We don't get volume till later anyway.
yeah. Well, especially today we're gonna have like the job openings and stuff, so I think that's kind of where the attention's gonna be.
100%.
And then I will. So there's just two articles I want to go over, and then I'll just pass it over to you.
Sounds good to me.
All
Trillion
right.
portfolio shrink.
Let's wait on a few more people to hop in. Did you catch anything in Asian session yesterday?
I was trying to trade gold. I gave it two attempts, managed risk like really well, but just wasn't playing out for me. There
Okay.
was a little indecision. The 1836 level, I believe it
Mm-hmm.
was just playing around. Where's gold? 1836. We had a good setup, and it looked like price was just going to continue down,
Yeah.
but the level at 1834.40
Uh huh.
was just kept holding support. I thought we were going to break that with a fairly clean move to the left,
Yeah.
but just not enough volume in the Asian session to keep pushing it down. It was already pretty overextended anyway, so it was just kind of it needed another pullback. But again, like I said, managed risk really well, and to me, that's kind of a win for anybody
For
when
sure.
you lose a lot less.
I caught the same move, like just for 25 pips,
Nice.
and then price
We
retraced, and then hit like a trail stop loss, and then right before going to bed, I saw like those topic rejections and stuff that happened, like when you go into the hourly,
Yep.
and then price flipped back down, breaking the previous daily low. I tried to give it another attempt, and then it just like continued pushing. But I do think we're gonna exhaust out very soon.
Yeah, we could be. I mean, we just need 1828 to break.
Yeah.
I don't know if anyone's following along with us on the chart, but we'll break it all down for you.
Yeah. All right.
You're just waiting for all right, we got Lewis, Sammy. Good stuff. What is up, guys? Praveen popping in.
All right.
12 people
Shall we
so
go ahead
far.
and get started?
Absolutely.
All right. Awesome. So there's two articles I want to go over, and then I'm gonna go ahead and pass it over to Stefanos for the rest of the technical analysis. But the very first one that I want to go over, and both of them have to do with central banks. The first one is going to be with the Fed, where they're going to start experimenting of letting 8.9 trillion portfolio shrink. So obviously we know that they're going to be increasing interest rates. They also have to shrink their balance sheet, right, in order to kind of move into this healthy continuing of increasing interest rates and pulling out all that quantitative easing that they provided into the economy, right? So obviously they're not going to pull out the entire thing. It takes time, and that's kind of what we have been doing over the past couple of months, ever since we kind of made the decision to continue increasing interest rates, where we start to pull out and start to decrease or shrink down the balance sheet. So it seems like they're going to continue doing this. They're going to continue shrinking, but at a little bit of a faster pace. So the balance sheet will be reduced at a pace that's almost twice as fast as after the last financial crisis. So this is also one of the things which is, it's good if you're going to continue increasing interest rates, by half basis point hikes and things like that, over time, like they're saying in June. So today's like the first day of June. So this month and then also next month, and then they're saying that either we're going to pull it back down to quarter basis point hikes in September, or we're just not going to do any hikes in September, because that would kind of make sense since we have been increasing interest rates, over the past couple of months. So it's good in that sense, but also when you start to decrease and your balance sheet, when you start to shrink it down, and you start to increase interest rates, and you start to take some more aggressive approach, that's kind of where that sentiment of what we have been seeing so far of a recession kind of kicks in, right? It kind of only strengthens that. So we need to see again the economic data. That's where the emphasis is going to be, especially for this month and next month, to see if the economic data and the economic state is there to kind of support this increase in interest rates and the continuation of increase in interest rates that we could end up potentially seeing. So this is kind of the one thing that I'm kind of paying attention to the most, this month especially. And then as you continue down the article, you start to see a little bit of more details about this, but it seems like there's still, again, the uncertainty over the course of the balance sheet was said by commentators that have contributed to the market turmoil that ultimately have helped bring an end to the Fed's last rate hike campaign. So now they're going to continue to increase the interest rates, and we are seeing a little bit of more aggressive approach. But again, they did say in their FOMC meetings, they did say, like, a lot of the speeches that the FOMC members are making, that a lot of this, again, depends on the economic data. A lot of people are in support of half basis point hike still. Until July, and then scale it back and maybe not even do any sort of interest rate hikes in September, for September, and a couple of months onwards from there. Again, all completely depending on the economic data that we have. So paying attention to anything that has to do with consumers, paying attention to the retail sales, paying attention to PMI, paying attention to manufacturing or industrial production. Like, there's just different names for it, but just paying attention to the different sectors of the economy overall, that's kind of where the eyes are at the moment.
Sure, but if you give me 1 second while you're doing this, I'm just going to use the bathroom. I'll be right back.
No worries. And then over on to the UK side, same thing, the sentiment of, is there going to be a recession, as the UK is also moving or the Bank of England is also moving aggressively in the UK with their tightening their monetary policies, moving from accommodative monetary policies to contractionary, shrinking down their balance sheets as well, and increasing their interest rates as well. So that's where we're sitting at right now with both of the central banks, from the Fed and also with the Bank of England. So right now, again, the focus, even for the UK, is going to be on the economic data to see, can we continue to increase interest rates, or are we just going to hold on to the current interest rates, and what are we expecting for the next couple of months? Any questions or anything like that so far?
Oh, good.
All right, and then obviously we know that along with this, there's the aid package that's being provided to pretty much help out with the high energy prices, to help out with the high cost of living, all that stuff that we have been talking about so far, especially in the weekly outlooks. But those are the two articles I want to go over today. I think right now in our session that we usually trade until like 6 a.m. PST, I think a lot of it is just going to be just technical moves, how price is setting up from a technical perspective. But going into, let's say, 7 a.m. PST, when the manufacturing PMI is going to be coming out, when the job opening is going to be coming out, and if you're trading the Canadian dollar, that's when the interest rates are going to be coming out as well. I think that's when the market's really going to start reacting and showing a little bit of more fundamental and market sentiment trading. So even with Bank of Canada, we're expecting a half basis point hike here as well. So let's see, what they end up saying in their rate statement. If you're trading the Canadian dollar, that's what you want to pay attention to. And then for everybody else, I think we're going to have a much bigger effect with the PMI coming out and then the job openings. This is pretty much kickstarting NFP for us, because tomorrow is when we start seeing some more labor market data coming out, where you have the challenger job cuts, you have the ADP non-farm employment change coming out, and then every week we always have unemployment claims coming out as well, and that's preparing us for NFP on Friday. And tomorrow we also have OPEC coming out, but we already know the sentiment from them, and it's that they're not going to be increasing their production. There we go. So they said that they're not going to be increasing their production, and they've also said that any high prices that we're seeing, high energy prices that we're seeing in a lot of the countries, it's really not their fault, because they've done whatever they can in order to stabilize the global market. But the high energy prices are because of the failure to kind of maintain or kind of regulate their oil productions and consumptions and all of that in the countries themselves. All right.
What's up? How'd it go?
Yeah, just went over the economic calendar and then both of the articles. I'm gonna pass it over to you now.
Sure.
Go for it.
Right. let's take a look. I wanted to bring this up real quick. Just looking at the monetary policy or the political policy of Japan and the way they handle their monetary policy was pretty interesting. Reading reading this morning. Where are we? Here we go. On the central bank agenda was a speech from Bank of Japan Deputy Governor Wakatabe. I don't know how to pronounce that, but
Mm-hmm.
he did not depart from the Bank of Japan mantra of sustaining its easing program and back it up with saying the bout of cost push inflation being experienced is best handled by fiscal and energy policies, not changes to monetary policy. So they're kind of taking a different approach than, or they've been anyway, taking a different approach than most countries when it comes to monetary policy and always keeping it very eased off as far as like interest rates and stuff like that. But they think that they just need to change their policies when it comes to fiscal or energy so that they can combat inflation. So it's just a different approach. It's pretty interesting. But what you are seeing is an extremely weak Japanese yen right now. We're just dropping. And if you look at all the yen pairs, most of them are dropping or on their way up as well, since this is not the base currency. But let's look over here at GJ, and that should give you a good idea of like why GJ's been bouncing off 156 and continuing up over here, and now starting the month off pretty bullish. It's because the Japanese yen is so weak right now, right? Every time we get these pullbacks over here, you know that we're just going to hold a resistance to continue down and retest the lows, especially with easing monetary policy like that. So again, guys, before I get started with like breaking down the charts, just keep in mind it's the beginning of the month, first day of the month. This is where you kind of want to lower your risk a little bit, right? You want to let the month kind of ease in. It's just like any kind of week as well, where you start out the week Sunday, Monday, it's want to lower your risk a little bit. Tuesday, Wednesday, Thursday, that's where you raise your risk. Same thing with any kind of month. You want to start the month out a little bit lower risk and be a little bit more conservative, and then middle of the month, that's where you start to ramp that up. That's where you get the most volume. Um, so anyway, previous monthly candle ended up closing weak, like I told, I was saying we could be if we retraced it even more. So we closed a weak bullish, bearish candle, following a, there we go, following a very nice bullish run over here, creating these highs up here, right? And now this candle ends up closing like a very weak bearish candle. Can this candle be creating a bottom wick? I wanted to create that bottom wick right there and then pass the high of that candle first to possibly be continuing up. As we know, the Great Britain economy is not the best right now. It's pretty weak. If you guys just read this article alone, right here, talking about their manufacturing PMI, they go into, zoomed in a lot. They go into a lot of detail about their economy as a whole anyway. But if you guys want this, I'll send this into the chat right now. What's up, KB? Alright, there you go. So if you guys just want to read through that, it'll give you a good idea of the state of the economy in Great Britain. But let's see. What do we have marked off right here? Okay, so again, we got these highs up here, 167, 500. I just marked it in over here, this previous support over here. And those are those highs. So can we come up and retest that, or are we going to get a deeper pullback and maybe even like a bottom wick on the monthly? Or, again, we just rejected 164, multiple options here. Could we be creating a top wick on the monthly, retracing, flipping, and maybe even filling this wick, coming back down even further? All right, looking at the weekly now, a lot of these yen pairs look very similar, where we're just kind of rallying right now, holding that support, obviously at 156, but 158 here, that strong support, candle body support, strong bullish candles. This candle created its bottom wick, past the high of that wick, and what did we say in the beginning of the week? If that happened, we could very well be continuing up and mirroring this move. We just had to be worried about, not worried, but aware of some of these levels over here in the lower time frame, some of these wicks. But the current weekly candle is very strong. So, looking at the daily now, what do? We've been in this bearish trend, lower lows, lower highs, now we're starting to make these higher lows and break the previous resistances. All right, so we just got to mark some of these levels off right here that we finally were breaking. We can always adjust as we go down. We have a little bit of a consolidation over here right below 164, but that was that top wick on the previous monthly candle over here. So can we end up retesting 164 and maybe even break through it, continuing back up to 167,500? It could happen, right? Especially with the weak Japanese yen, that could definitely be happening. The current daily candle doesn't have a bottom wick. So no rejection wick. We just, basically passed the high of that candle right away, and now we're pushing into this area. I'm looking at that little resistance right there of why price is kind of like starting to reject this area over here. All right, we're holding resistance, these candle body highs. You have all these wicks up here that price, we could very well push through. But again, we're rejecting this area, and we have multiple times here. So let's see what it looks like on the lower time frame, like the 4 hour. All right, so the 4 hour, and let's adjust our zones over here too. If you take a look, there's a nice break of this previous resistance over here. Price bounced off multiple times. It looked like we were rejecting over here, but we ended up holding a nice support right in this area. We've been pushing ever since. All right, higher low formed with this wick past the high of the previous weak bearish candle, and then we've been off to the races ever since. The only thing is, let's go back to since tapping 156 down here on the 4 hour. We've been creating higher lows and higher highs. Now look at the first time. Well, it's definitely not the first time we bounced off 156, but the first time this month. We bounced off 156, holding that support. We had a huge rally bouncing off that area. And this rally was about 500 pips, right? So every time we get a nice rally like that, we get a strong pullback, holding a higher low support to continue back up. Right, and we kind of consolidate a little bit before continuing up even more. But since tapping this trend line for the last time, we've been pushing all the way up. We're about 400 pips right next to our previous resistance over here. And you see how kind of like overextended our move is right here, right? So what are the chances that you get some kind of a pullback after rejecting? We could very well push up to 164 and then do so. But if we reject this level, could we be pulling back into this area to continue up? Could we be pulling back even further to continue up? Or even breaking this support, coming into this key area right here, holding support there, and then continuing up from there. Unless we start to break these areas, even break this area at 160 right over here and then continue down, but I don't think that's going to happen. I'm just looking for some kind of a pullback over here where price can officially continue up. Maybe even we get a pullback just down to this level over here, right? And then continue up. Because this wick over here looks like we're rejecting this area pretty hard. All right, just taking a look over here to the left. Hard rejections, nice resistance, nice supply zone. So can we end up filling that wick, or are we going to reject it and continue back down real quick for a quick pullback? So now you see it on the 1 hour. Now it's starting to get a little clearer. Right now in the 1 hour, we had a nice bullish 1 hour candle following a bearish candle, which means you have a nice support formed, right? And it looked like price could be continuing up to fill this wick, but now it's rejecting this level over here. You'll be able to see it on the lower time frames. Well, are we going to close below this support over here, right? It's going to be difficult for you to take any kind of sells. Maybe you want to wait for either this level to break right here for you to get those pullback sells, or wait for a retest right here for higher risk, high reward sells. We'll see how many pips are in each. There we go. So you get about 54 pips right over here that you could grab something if you think price is coming back to 162. Looking at the 30-minute now. Gonna adjust this down. this is going to be difficult for you to take any kind of sells. You may want to be a little more cautious about it. I just want to adjust this trend line here. Here we go. We've been kind of like following one right here, kind of respecting it. Looks like we're starting to exhaust up here and starting to break it. But again, what I always say, when you're trying to call tops, or it looks like tops could be called, you want to wait for that retest. So wait for a close below this area, wait for at least a top wick rejection, but I would wait for the classic retest and then take this thing down if you have enough pips in this range. Yeah, you got 34, 35 pips. So you could definitely be grabbing that. Wait for that New York volume, and maybe we could get that close below in a little retest and take this thing down to this area. Just be aware of this little resistance right here. That's why you want to wait for the retest, because we could very well close below this area, start to reject this previous resistance, and then fake you out, and then continue back up. Just this is why fundamentals are so important, because it gives you confidence on the back end, knowing why the move is happening and why your pair is moving the way it does. Like right now, I really don't want to sell any kind of a yen pair, right? Any yen pair should be being bought right now. As you see, the yen is extremely weak, and I think GJ's been the strongest of them all this week, right? Maybe not today. If you guys look at like a currency strength indicator, you'll see that I think there's other yen pairs that are a little bit stronger today, but this one is definitely been pushing all week, and it's got the most volume. So right now, you're sitting in a no trade range. Right here and right here. I don't know if I'd take any buys until we break 163,400 right up here. So once we break that area, you have this resistance up top, up here. You also have this wick that you may be needing to be aware of. But I think we could head to 164 over here, or somewhere in this area, 163,800, if we do break the 400 level. So wait, let me see this. You know, you might be able to grab something in here. It's a little tricky, but yeah, you got about 27 pips. You definitely could grab at least 10 in there. Looks like we're starting to drop here. Keep in mind, always know the time. It's we got 5 minutes left for the 8 o'clock candle to open, and the New York session to open too. So just keep that in mind. Price is pushing down. It's not like you have a stop loss or a valid stop loss here anyway. Just know that, like, obviously you could put your stop loss up here if you're trying to get this impulse entry, but why don't you just wait for the candle to close below, get the hourly wick rejection here, and then you have a lot tighter of a stop loss and a better risk to reward to take this down if that's what you get. Everything makes sense on GJ here? Let's see, I'm just going to read through some of the comments. KB, do you think we have the fundamentals to support GJ to continue bullish? I know the UK have said they'll help with rising cost of living by providing financial aid, but the sentiment being put out by consumers that are struggling is the amount they provide. Yeah. See, when the government starts providing money like this, it's never going to be enough, right? They're never going to be able to do enough for everyone, and then everyone's just going to become dependent on the government, and that's not the kind of society that you want.
We've seen this with stimulus checks too, right? So this is something that we were talking about yesterday when we were doing the trade breakdown or updates.
Consumer habits.
Yeah, and it's, with the stimulus check, I was telling them, like, the fact that I still keep thinking about this one. It was a story about this one consumer who basically said that the stimulus check that was being provided was not enough to pay for his rent. So what he did instead was he went out and bought a PS5. That's how an average consumer behaves. You give them money, they're going to go out and spend it on things that they don't need, or, they're not going to be smart about it when it comes to personal finance.
Yeah.
But if you're, into investing, if you're into trading and all that, then obviously you would start to understand some of these things. But an average consumer, if you give them money, they are going to go out and they are going to spend it as much as they can.
Yep. No, they're not. Most people, and it's like one of those things where it's like a deeper thing. Most people aren't patient. Most people don't think about the future. They think about now. They
Yeah,
put everything, their feelings, their actions, everything's got to be for themselves now. But they don't think about the future. So when you go buy a $1,400 Gucci belt, thinking that you're going to go out to dinner tonight, tomorrow you're not going to be too happy about that.
exactly.
So France. I want to see buy stop liquidity where all the buy stops triggered, then reverse down. Not sure what day it will happen. Yeah, I assume you're talking about GJ. But yeah, I mean, you guys see, most people are looking for buys right now. As a lot of people are getting FOMO right now too, missing some of this move, seeing all these bullish candles, thinking that we're just going to continue up. They're ignoring some of the signs over here of these rejections. Now we can very well continue up, but they're gonna be taking buys over here without any kind of confirmation. So just wait for levels to break. This right here, don't even touch it. I don't even think I have to tell you guys, but maybe some people on YouTube are tempted to take this, so I just feel the need to say it. Don't trade anything in here. Wait for our break and retest right here. This might be even safer. All right. We also have, actually, I don't think we have any, yeah, we don't have any data coming out today for Great Britain, right?
It's just going to be the job openings, the manufacturing PMI, and then also the interest rates from Canada coming out. So I think that's going to be when the volume's going to be kicking in a lot more.
Yeah, definitely.
Right now, it's just going to be quick scalps that you guys would be catching. And then as you get closer to the economic data release, you could probably hold on to some of those scalps if you can catch it at if you're in a downtrend, catch it at like a lower high as prices pushing down or things like that.
Yeah, this the manufacturing PMIs, you see such a contracting market now. Obviously, everything's over 50, but at the same time, we're missing our mark on forecasts and previous as well sometimes. So we're just staying the same.
Yeah.
There's not much consumer confidence out there. I'm surprised U.S.'s consumer confidence came out higher than expected, right?
Mm-hmm.
The state of the economy, the state of Great Britain's economy, China's economy, Russia's economy, any country in Europe.
It
Like
is starting to decrease, right? But we were expecting a massive drop in the confidence, but it's still happening, at a slower pace. So even from like 108 dropping down to 106, it's not a massive drop down, but it tells us that slowly we are starting to lose this confidence of some sort here.
Absolutely. The hourly just closed or the 30-minute just closed as well, and it closed above that level. So we ended
Mm-hmm.
up rejecting this level again. So just be careful when it comes to taking sells. You need to wait for your confirmations. I like the price action here. You got the high created, hard rejection of this level up here. Close bearish, right? Lower low, lower high. Well, not lower low, but lower high, whatever here. Lower highs. Strong bearish candle with a wick to fill. But we ended up rejecting this level. So you're going to stay smart the first day of the month. You're not going to just try to take this right now with your stop loss up here. Just automatically take it thinking that we're going to break through. Wait for the confirmations. That's going to be the biggest thing for you moving forward with your consistency in trading. It's just waiting. All right. So we all clear on GJ?
Yep.
Awesome. Let's move over to gold. We're gonna break down gold just because we have Jolt's job openings and some data coming out. So once we do that, then I'll get into EU, KB. All right, buddy. All right. So again, looking at the monthly over here the on gold over here, strong bearish candle with a wick to fill, right? But we did end up closing above 1830 and rejecting that again. All right, but we did leave a wick to fill. What are we doing here? Did we even form a top wick on the monthly, or are we just pushing down? All right, or are we pushing down to grab a liquidity wick, hold support here, and then continue up with some fear in the market? But or with that, with the Fed sounding more dovish. Looking at the weekly now, weekly looks like a perfect formation for price to continue down. Since tapping 2000 up here, we've been in this extremely bearish trend. Looks like we're holding a resistance right here with this wick tapping into that area. So I'm actually just gonna throw this right here for you. There we go. So we got that resistance right over here around 1870. Price holding resistance. We were holding support right over here. This candle got weaker. Lower high formed here, past the low of the previous candle, and we're just, continuing right back down. We're sitting right at 1830 right now, so you just gotta be careful of price bouncing off that area. Again, I'll keep saying it. First day of the month. Be smart, be patient. But again, are we gonna hold 1830 as support, or are we going to continue down to retest our lows down here? All right, the daily. Daily here we have our support, right? Support here, here, and here. Price bouncing off that level. But now we came right back up to this previous area right here, previous resistance, around 1870, holding that area as well. Strong bearish candle closing at that level, right? Looks like we're getting a weak support formed. These candles get weaker, then we get the top wick formed on that candle, and we pass the low of those candles right there. Beautiful price action. How many pips is that? Yeah, you got about 180 in there. Almost 200 pips right there. So right now, can we break through 1830 over here and continue right back down to this 1810 level? Previous support. Maybe we end up holding a support here or a higher low, tapping into this area, tapping this trend line here, and then continuing back up for a deeper pullback before continuing down, or are we going to hold support here and continue back up? Looking at the 4-hour now. The 4-hour, we recently just broke our previous key area over here. Previous support, resistance, support over here. We look like we retested a few times, and now we're just exiting the area. We're pretty overextended over here, right? How much farther can we go without getting some kind of a pullback right now? So are we going to stay above 1830 right now before any of the news comes out at 8:30, or are we going to continue to drop, passing the low of the previous 4-hour candle right here? Right, this candle closed bearish, and this candle created a top wick, pass the low of that candle, mirror this candle right here, this move right over here, and continue right back down. I personally would rather wait for some kind of for the news to come out, us to get a resistance formed or support, but I want to wait for better structure over here or some kind of a pullback before taking my trade. All right, so as you see 1830 right down here, I'm just gonna mark this off like that. One in the chat, I agree. Awesome. Now I'm just gonna actually adjust this just for our current price action right here. What you have is you're not going to have any safe buys until we possibly start breaking this trend line over here, or this resistance 1838, before we continue right up into this level. It's a pretty clean range right there. No? About 80 pips right there. I wouldn't take any buys until we start breaking that level, and possibly even that might be tricky too. Actually, you know what? No, that's perfect. I just wait for the 1838 level to break, and then you could start taking buys from there or looking at buys. For sells now, you have this little rejection area right over here that you may want to be aware of, but you got a clean move to the left over here, continuing down. If you want to secure a little bit somewhere around this area, right? But you got a clean move in this range, clean move right here in this range as well. So if we close below that level, and if we don't keep rejecting it like we are right now, you get a nice move right down here. That's 63 pips.
The market just opened up, so just remember, again, to be patient with all your trades. Give this a couple of minutes. Let the market kind of fluctuate as it needs to. But when you're looking at higher time frames, how just Stefanos just went over, it is overextended. Obviously, price does need to correct.
Absolutely. So we got a no trade range. Stay out of that. Wait for the news. Trade the reaction to the news. And then that's gold. But a lot of people just got trapped right here. This candle passed below that candle.
Yep.
Okay, we were just continuing down, not realizing how strong on the monthly 1830 has been.
Absolutely.
So now we have KB. Been watching EU lately. Okay. Possible break and retest while respecting the zone as resistance. Okay. EU, that's the 4 hour. Yeah, no, I see. I do see this level. It is a little messy though. I see that level getting rejected, and then you could drag this over to the left, right over here as well. Yeah, after is 107.8 a strong level over here? It's a 4 hour. It looks like it. I'm saying like very strong. And are we in a downtrend over here? Which I believe we are. KB, you there?
Sorry, I was muted. Yeah, based on higher time frames, I think that was taken either that zone, that level was marked either off the daily or the weekly. But yeah, we're in a strong downtrend at the minute.
Yeah, so we're getting a hard bounce off that area. We're getting, this price action right here is breaking previous supports, right? Not that, I mean, we are in a bullish trend right now. So you may want to be aware of that.
Yeah,
So I think maybe your best bet will be safe sells below here,
below that area,
for any kind of higher time frame stuff. Right down into this level, probably secure around here,
yeah.
right? It's about 50 pips from here to here.
Yeah, it's a lot cleaner there.
But if you're looking, can I zoom in? I can't zoom in. I like how I see what you're seeing. Right, we end up getting this retested, this area after forming this low. Hold that resistance. Last tap of that area. This candle creates a top wick past the low of that candle already. So are we continuing down? How do the lower time frames look like in this range? Are we very choppy?
Yeah, it's pretty choppy. That's why I'm just
Keep an eye on
waiting.
this
But
level too.
yeah,
If you look to the left,
That
yeah,
1.08 level, also the 1.078 that you have, Chris, I'm looking at it right now. It's also based off the monthly time frame, so that
yeah.
retracement makes sense.
oh, nice bounce. Oh, yeah, you get a nice bounce off that area. Like I said, just be aware of this. Look at the lower time frame. See how we're reacting to that area, but you may want to wait for like redraw your zone a little bit. Oh, to right here,
Yeah.
and then once price breaks this area right here, the support, you got a nice move. 1055.
Yeah, that's why I've set a price on it, to be honest. I've just seen that happening right now, that little break and retest. So I'm just keeping an eye on it.
Mm-hmm. Good job, though, man.
Perfect. Thanks very
Now,
much.
now, KB, when you send that, does that help your confidence?
Yeah, yeah, 100%, 100%.
Just running through it with other people.
Seeing your eyes, seeing VJ's opinion, just adds to the confidence and stuff.
Gets you better, doesn't it?
Mm-hmm.
What a
So I've just been
coincidence.
like trying to look at different pairs now, just experiment. I've been backtesting EU for like about 2, 3 months.
Okay,
So just want to
and you like
see.
it.
Yeah, yeah, it's moving. Well, as we know, the euro interest rate's coming out next week, and they're expected to stay the same. Then we have the Fed hikes as well, so it's an interesting pair at the minute.
Yeah, absolutely. I know. What's his face trades. Jamie trades EJ as well.
Mm-hmm. Mm-hmm.
Be a similar pair. Oh, there we go. Now it's zoomed in. I like how these links open up on the on
And that.
Trading View now, the desktop version.
Hmm.
Wow, look at that drop. Gap down a little bit.
I do think we're gonna end up holding out the support here. At least for gold, I think it's gonna be more reactive to the economic data. But when it comes to like GJ or E or like any other currency pairs, I think they will have some sort of like technical scalps and stuff that we can end up taking before the economic data comes out.
Absolutely. Why does this do this? It's weird. Yes, now we wait. I think, let's see. I think a few people sent their chart in here. Yeah, that's right. Okay, so Jamie sent this chart into the group and then revised it a little bit. What he was looking at, yeah, this is much better, Jamie. Much better. So this was actually the not that this was terrible at all, but this is the original one he sent, right? So you have this consolidation over here on EJ. To me, what I said was I'd rather see price start to break this area right here, and then your break and retest is right here.
Hmm.
And then for sells, I don't think I want to take anything in these areas over here. I think safe sells are going to be below this area right here, especially with fundamentals. Right, so you could, I mean, you could take something in here. Wait for like a little retest right here, but I think this will be safer. Like that's what I sent right over here to him as like a revised. You want to wait for this whole area to clear, and then what did he do? He went back and redrew it, and everything's perfect. I think these are much cleaner zones. Do you agree, Jamie?
Absolutely.
Good stuff. But I mean, this is what we're talking about when it comes to sending charts. Like, that's how you guys get better. Whether it's to your friends, to us, to anybody, to your family. If you want to boost your ego, they'll be like, I have no idea what I'm looking at. You're like, yeah, I'm the man. Nah, that doesn't happen. So, midway through the week, how's everyone doing so far?
Pretty good. I mean, my first trades for the week were yesterday in Asian session, and it moved really nice.
Nice. We're on gold?
On gold, and then there was one or two on GJ as well.
Okay.
One on GJ, two on gold.
Hey, Sharma, while we're waiting for news, would you mind breaking down some of your US 30 trades? Because it's definitely a pair I would love to get into.
Yep,
Just want
yep,
to see the way you look at it.
yep.
Sure, it'll help other people too.
You
Do you
want
want
to
me
pull
to?
it up? Yeah.
There you go.
Let's see. Go ahead. Do you want to pull it up?
Oh, yeah. I thought you were sharing your screen. My bad.
No, no.
All right. Let's see. It's 30. Okay. So you want to go with which time frame?
Let's start off with the monthly, and I'll break the entire thing down.
Okay. You want me to erase everything?
Yeah.
Okay.
Alrighty. Yep, this is good.
Yep.
Alright, so the very first thing that I start off with is obviously what's the structure look like here. So we're gonna zoom out a little bit just so you guys can see, like, from the very beginning until now, we're sitting at those all-time highs, right? So there you go. We're sitting at the all-time highs, and then we start to see some sort of corrective move. So just tapping into how price has reacted previously here. Every time there's any sort of correction coming in, so we saw like economic slowdown, for example, happening back in like 2016, 2017, going to 2018, right? So for a very long time we just tapped into these areas. It was like a slowdown, so not a recession but just a slowdown that we saw. And then in 2020, of course, the pandemic happened, so we saw retracements after tapping into again those all-time highs. That's pretty much where we've come back up to after the Fed stepped in at this point, where they literally said that you were not able to like sell your stocks. If you had Robinhood, TD Ameritrade, if you're trading around this time, you guys saw this happen where they literally said that you could not sell off your shares or anything like that. And then from that liquidity, they provided liquidity into the markets, and we saw a massive push up. Now this is pretty much where we're sitting at. Right now the structure is still quite bullish. It looks like we're starting to change the structure, but we haven't just yet, because we're coming back and kind of retesting back into these support areas, right? So that's the first area that I would mark off here on the monthly time frame, this little support area right here.
Let me do that right now?
Yes, please.
Just didn't know if you wanted to do it.
There you go. And then another level that I'm going to mark off here just for reference as we drop down to lower time frames is going to be this little resistance zone that price tapped into with the bottom wick rejection and then pull right back up. Yep, there we go. Now I'm going to drop down to the weekly time frame. So those are the only two levels I'm going to mark off on the monthly, and then everything else is going to come from those lower time frames. So when we come onto the weekly time frame, we see that price has been holding on to all this consolidation, right? The market taps into those all-time highs, fails to continue breaking above that, comes back, and for the most part we just stay in this little zone, and just we end up consolidating until we start to see the fundamentals that finally helped us continue pushing down. This is when we start to get the sentiment of we're going to see continued increased interest rates, and we are going to see that at least a couple of months, and that's when the markets started to really price all that in, right? When we started to drop back down into these levels. When you look to the left, where we're really holding on to support, again, that was another form of consolidation here to the left, where we try to break above this, pull right back down, right, come back into these little areas of support, grabbing liquidity. How do you know it's liquidity? How do you figure out like any zone is liquidity really? You will see volume kicking in, right? So when price taps into this, rejects it, and pushes back up, there's a ton of volume in this one candle. We pull back, hold on to this area of support, and then continue pushing up with a ton of volume until we end up in this consolidation that we saw like off the monthly and weeklies level right here. So we come back and we're holding onto the same area as support, pushing back up, and now we saw a massive sell-off. From a technical level, price is never just going to continue pushing down. You always have to correct those moves. So either that happens in retracements or it happens in consolidation. There's only two ways that the market's ever going to collect orders. So we start to see these pullbacks happening here, and a lot of this came from the mixed data and everything that we were seeing, but also just from the sentiment that was being put out by a lot of the Federal Reserve members, so FOMC members, and also what Powell was saying and all that stuff. So a lot of this push corrective move also came from that last week. We ended off pretty strong. So now what I was looking at, now we have those levels based off the monthly time frame. Now based off the weekly as well, at the very minimum, as price was rejecting off of these areas, I was kind of targeting this push back up. So the very first thing that I did was caught a couple of sells coming back down here. And then after price held onto a support, I waited for a clear support to be formed here, which happened on the daily time frame. So the only thing that I'm going to mark off here, Stefanos, is going to be this little zone. If you want to go ahead and mark that off.
Which one?
Up top, right here.
Oh,
Yep. But the thought process was that if I'm going to look for any buys, then I would need to see a clear support being formed here. So I need to see candle closes, right? Now we're going to drop down to the daily time frame.
I also like that the weekly had no top wick.
Right. And so when you come onto the daily time frame, now we start to see that, okay, a clear support has been formed. This is usually like my favorite kind of candle formation to trade, the more specifically this one here. But basically what I want to see is bottom wick rejections. That tells me that we're coming back and grabbing liquidity. We've already verified this level based off the weekly time frame, right? How price has been consolidating there for a very long time. So we know that there is liquidity there. We wait for the support to be formed, and then as daily highs here are being broken, this was one of the first trades that I took here for any buys on gold or on US 30 here. And as price started to push up, I targeted my TP and everything based off the 4-hour time frame. But ultimately, the understanding was that we are at the very minimum going to come up into this zone, if not anywhere between 34,000 to 33,000. I believe is like 800 or something like that. So like somewhere in here, we're gonna correct this entire sell-off that happened. And then as we drop down to lower time frames now, so there's really nothing else to mark off here on the daily time frame. It's just the understanding that based off of higher time frames, at the very minimum, we're coming back into this zone. So after a clear support is formed, daily highs are being broken. That's your first entry as price is pushing up. Then you drop down to the 4-hour time frame, please. And then this is where you have to see the bullish structure, which is again, how we marked off like the lower or the bear structure. Price is never just going to continue in one direction. It has to correct. It has to create those higher highs and higher lows, or it does it through consolidation. So as price more specifically was breaking out of this consolidation right here on this 4-hour time frame, right here, we wait for that, and then as price is pushing up, that's your first scalp that I took here, the very first buy opportunity. Yep, there you go. And then as price retraced back down, held onto a support, and then I gave like another attempt as price is pushing up. So I was using these levels to the left here on the 4-hour time frame to kind of figure out, what are my TP levels are going to be here. I will find like the exact price and everything like that. I'm just gonna have to go back in my history, but I'll give that to you guys as well. I'll like make a post or something about it. But that's pretty much how I broke it down. And then from an economic, like when you're looking at fundamentals, I'm looking at what the Fed is saying, because that's really what the market is pricing in at the moment. That's what the big catalyst is. Inflation, all of that, we've already taken that into account. We've already consolidated because of the uncertainty and everything like that. But as the Fed continues to increase interest rates, historically we have seen stocks move in the opposite direction. And so as we have already priced that in, the sentiment has been put out there for a couple of months that we're going to continue increasing interest rates. We've already dropped down, we've already grabbed liquidity, and now as economic data starts to come out a little bit, fluctuating, where we are seeing like PMI numbers, for example, dropping down, retail sales dropping down, but consumer confidence is still pretty high compared to what we were anticipating. We're starting to price in all these economic data as factors and all that and trying to push back up, again, simply to grab liquidity. Because when you go onto the daily, when you go onto the weekly, we've already broken the bullish structure, right? If you go back onto the daily time frame real quick, Stefanos. And then, yeah, just zoom out so I can see the left as well. There you go. So this was our, and then till like 2020. Or you could just do like, reset chart and then see.
Oh, there you go.
There you go. And then just zoom out. There we go. Perfect. So here, we have been in this bullish structure, right? And then we ended up consolidating out here. We broke, we came back, kind of retested into these areas, and then we start to make new lows. We're coming back. The understanding here is basically we just need to hold on to resistance into these levels here and then continue pushing down. So what I'm looking at right now is pretty much another sell opportunity as price starts to break. This bottom wick that you guys see here. Or I guess we could zoom in now just to show them the bottom wick. Yeah. So what I'm looking at is price to continue breaking this bottom wick here. Look to the left, we're holding on to resistance areas. We've seen candle closes and stuff. So as price continues breaking below this, we've already created like clear resistance here. We just need to continue pushing down. Now when you drop down to the 4-hour time frame, hourly time frames, you need to see the break and retest to continue pushing down.
Which you're looking for below here?
Yeah.
Do you want me to neaten this up?
Yeah, sure. So
Yes.
anything in between that, as price is consolidating right now, I'm not looking for any trades in this area whatsoever. If there are going to be any buys, I would be looking for buys above this as price is breaking above this and continuing to push up. Again, those could be your quick trades coming back into this area. But if we just end up holding onto this area as resistance and then price pushes back down, then that's the first trade and then a continuation from that.
Does this make sense right there for you?
Yeah.
So you're saying maybe you would take this, but you'd rather wait for 33.5.
No, I will take that, but I need the candle close above that. So at least like an hourly candle close. But right now on the 4 hour, it looks like we're just consolidating here, right?
Yep. So you're basically no trade range. You're looking for something here, and then even safer up here.
Yep.
One thing I was looking at on, and great job by the way. I appreciate this. Makes a lot of sense.
Thank you.
I'm looking at GJ over here too, and how we are holding this support here. And then if you look at the lower time frames, how we keep bouncing off the support in a bullish trend, holding this support again. So can we be continuing up from here? Right? Not that you're going to trade this range, but I was looking at this as this candle closed a weak bearish candle. This candle created a bottom wick and passed the high of that candle. I was saying like, all right, I'm going to live back test this and see how this thing plays out. So the first of the month, I'm not going to execute on something like this. I'm just going to watch it play out. Definitely secure this resistance right here.
Right.
And then obviously secure up here as well. But I think that could possibly be playing out. I'm just not going to execute on it because I'm not comfortable trading, with all these wicks and rejections and stuff like that.
Absolutely.
E30 is coming around the corner. We're looking at gold here. Let me get gold here. Is that, there we go. Then up to the side. See what our numbers are. Oh, that's coming out at 10.
Yeah, we got time.
Oh my god. I'm so used to 8:30. Okay.
Yes, I think anything right now is just going to be purely technical moves or like even corrective moves, right? So if you're in an over-exhaustive structure, like we were talking about like on the 4 hour time frame for gold, for example, we could see like the volume starting to die down in these 4 hour candles, right? And obviously we need to see retracements happening.
Mm-hmm. Could we get a pullback?
Right, so maybe we could see a pullback leading into the economic data coming out, and at that point we could probably be sitting, somewhere around this area, exactly where you have your red zone. So sitting around that area, and then if we see positive data coming out, then maybe we could see gold continue to drop down, or maybe we get a deeper retracement of this massive sell-off that just happened.
Yep. Yeah, maybe we pull back above 1838.
Right.
And then you get those short-lived buys.
Yep. So that's where like your higher time frames really kick in, right? So your 4 hour, your daily, your weekly, taking a look at what's happening on those levels.
100%. Just back to GJ real quick. We can monitor this. Yeah, it's a pretty small range as well, which is why we want to kind of stay out of it, but we'll see. I feel like I have to make this clear for anyone on YouTube.
I think GJ is setting up really nice right now, like for a quick scalp, based off the hourly time frame.
Yeah. Yeah, definitely. Holding that higher low over here, New York volume starting to pump in.
Yep.
You can see how the 30-minute close. 30-minute close is a bullish candle, holding that support. But again, we're just kind of consolidating. We are printing lower highs over here, so you need to clear that. But it doesn't hurt to just guess where price is gonna go and play off that.
Yep.
Anybody have any questions? YouTube as well. Don't hesitate.
I think we'll stay on for like another 15 minutes or so, because after that, um, nothing's really going to be happening since economic data is coming out an hour after.
Yes.
Everyone pretty much understands what they're looking for. I don't know if you could see that black line. I tried to remove the annotation, but...
Oh, I'm sorry, where?
You don't see the black line on your...
Right here?
No.
Oh, like that you drew?
Yeah.
Yeah, I don't see anything. Does anyone else see it?
Yeah, I could see it on YouTube.
That's weird. Where is it? Point to it.
I can't see nothing either. Not in the Zoom.
Right there.
I don't see it.
You guys gotta hop onto YouTube. I swear I'm not crazy.
Yeah, right? I don't have my iPad on me right now. Man. So let's see. How are we playing out here?
Oh yeah, there's a huge line there.
What's up, KB?
On YouTube, there's a huge line there. I don't know
Yeah.
why.
Oh, really?
Yeah.
I doubt this is gonna work, but how about now?
Yeah, it's gone.
It's gone? Alright,
Yeah.
cool. I knew that was gonna work.
Got a question on YouTube.
There
For
we
the
go.
general direction, do you see US 30 heading up back again since all the rate hikes are priced in? Also, I saw they downgraded the expectation for a hike in September. Yeah, so I expect price to pretty much sit at these key levels until we see further developments in that. Yeah, they downgraded the expectation for a hike. They went from, maybe we'll see a quarter basis point hike to maybe we don't need any more rate hikes in September if we can successfully increase interest rates by half basis point hikes in June and July. So I just expect us to pretty much sit at these weekly and daily and weekly levels until we finally get some more developments to continue pushing down. I do think that it is still going to continue pushing down at least into like this 30,800, 30,000 level flat where we see that bottom wick rejection here. Scared to annotate again, that's going to leave a mark, but pretty much price just sitting into this area because from a technical perspective, we've already broken the bullish structure. All we're really doing is seeing corrective moves right now. For us to continue pushing bullish, I think we need to see more positive data coming out. We need to see more positive fundamentals coming out. Right now, even from the labor market perspective, I don't know how closely you follow just companies and the labor market in general, but we're seeing a lot of the major companies even laying off people just to save cost. So like PayPal and then Delta also kind of restricting their routes and also laying off people, for example. And then a lot of other similar companies, big companies, laying off people. They've started to do that already. So overall, when you start looking into those stock market fundamentals and company fundamentals, we start to see those things starting to get priced in. And then also the fact that the labor market is not as strong as they're showing us in the FOMC meeting minutes, which they were, for the most part, we're talking about 2021. And again, all the rate hike talks and stuff, that's again just sentiments that are being priced in. We need to see the actual rate hike. So maybe they could, instead of doing half basis point hike, they're looking at the economic data, they're looking at NFP that comes out this week, and they say that for whatever reason, that instead of doing half basis point hike, it's going to be a quarter basis point hike. I think that in itself is going to be probably a little bit more optimism, and yeah, that's when we could see US 30 pushing back up a little bit. But if they do like, half basis point hike and they're like, that's not really helping us out, and then in July they end up doing, a little bit higher, then I think the US 30 could continue dropping down. Or maybe they say that, okay, June was the last one, and July we can't really afford to do another rate hike. I think that would bring in some more optimism there too.
Good points. Yeah, as you can see, we're starting to reject from this level over here, and this is where you can go down the time frames a little bit and see, what's going on right here. 5 minute, you see that 5 minute rejection so far. I mean, we're breaking the previous 5 minute resistance right over here, so we could be retesting and holding support to continue up. Looking at the 1 minute now. Looks like, again, you get that bullish pressure, nice demand zone. Keep pushing up over here. Could we be retesting this area, holding support and continuing up? Or are we going to reject this area over here and continue to consolidate? People jumping into these you'll get trapped a lot, but at the same time, this is part of people's strategies and this is what they look for and they're comfortable taking it. This just isn't part of mine, so that's why I'm not.
This is where, understanding the limitation of your trades kick in, right? Where all of this is clearly a consolidation. Like we just saw that on like a 30-minute, 15-minute. But again, I'm not saying that you can't trade that because obviously there are moves right here. But, if this is a trade that you end up taking, then as price rejects into this is where you take partials and then your TP, like you have marked off, could be up top here.
Yep.
But understanding where, for the most part, price is rejecting, which tends to be, into this area right here.
The limitations to your trade.
Yep.
Try to kind of calm.
All right. Are there any other questions that you guys have? I hope you guys pretty much understand what you're looking for. Or if there's like another pair that you guys want us to break down and you guys are trading that, then, let us know.
No questions, guys? Look at that rejection. See, right now you'd probably be managing risk.
Yep.
Hopefully.
All right. So I think we're pretty much good, right? I don't think there's any other questions.
Let's see, they're talking about gold over here. Wow, there you go. Gold's pushing up.
Yep.
Look at that. So again, guys, just be aware you do have JOLTS job openings coming out and some U.S. data. So just be careful with gold today. A lot of that volume, as you guys know, and as of the last 6 months to a year, we've gotten a lot of volume from 10 to 11 a.m. So you may be able to, and those are the days that feel great when you wait all morning long and you don't get a trade till 10 a.m. and then you get that trade, perfect setup sets up, you get your profit goal for the day and you're done. But like sitting there waiting, that builds confidence too. There's so many things you could do in this game that builds confidence for yourself, and that's key. Once you have confidence, then everything starts to take off from there.
100%. So again, understand that a lot of these are just technical moves. There's no fundamental move or economic data that's coming out right now that's going to be pushing. All of this is technical. So the 4-hour, we saw that being exhaustive. We talked about how 1830 is a key level. Price is obviously bouncing off of that right now. So when you start to see this on the 30-minute, 15-minute, don't panic out and be like, I don't know what's going on. Like, is there something else that's kicking in right now that I'm not aware of? This is right now technical move. You need to see those corrective moves so then you can see the volume kicking in when the economic data does come out. But other than that, I believe we are doing a simulation this Friday, or is it next Friday, Stefanos?
This Friday's gonna be tough. Actually, yeah, I have a cousin in from North Carolina due to my grandparents having a 60th anniversary tomorrow.
Oh, nice! Congratulations to them.
A long time, right?
Yeah.
They make it work. They do well. But yeah, Friday he's gonna be in here till Saturday, and then I have 2 jobs on Friday. What time are you back testing? Probably at night, right?
Yeah. Usually it's like yours, like 6 p.m.
Okay. I could do Sunday. Want to do Sunday?
Yeah, we could do Sunday.
All right, cool.
All right, let me know the time. So we'll make an announcement here on YouTube as well, but we'll also do it on our Instagram. So we'll do a simulation session with you guys here live on YouTube on Sunday then.
Okay, love it.
All right.
All right, guys, have a great day. All right.
All right. Have a good day, everyone. Make sure you guys are trading safe. Again, don't trade the actual news release. Trade the reaction to it. So wait for some of the candle closes and stuff. What I'm going to be doing kind of when the news is coming out, especially with the Canadian interest rates, and then you also have the job openings, you also have the manufacturing PMI, that's when I would really feel comfortable dropping down to the 5 minute time frame, at least wait for the first 5 minute candle close after the news comes out, and then you can start, using that time frame to look for your trade opportunities. But don't be, panicking when you do see the volatility kicking in, because that's really what I'm expecting right now. Other than that, we will see you guys on Sunday, and then we will have the weekly outlook on